Good morning all. Camelback Trading 2724 coming to you this Monday morning, June 8th. We're looking at the market profile of the SPY ETF here on Window Trader. A lot to talk about this morning. Right now we're trading in balance, in value at a very, very visual area. A lot of questions posed to me this weekend. Was this excess to the upside? Well, that remains to be seen, right? Right now, buyers are trying to get their act back together again. I said this on Friday, and I'll repeat it. This market went too far, too fast in C, D, and E period. It absolutely exhausted the algorithms. They reached a very, very visual level, the 321 level, where I have single prints. I said we got above the 2019 settlement. I was wrong. For some reason, I thought it was 321.26. 2019 settlement is 321.86 in SPY, but close enough, right? Just at a very visual level before it backed off. And I have single prints, which the ES does not, up to the 322.04 level. Now, here's something that we have to ponder. After the 08-09 debacle, when the markets basically went full bull mode after that, SPY, ES, and Dow led the way. It took a lot longer for the NASDAQ to catch up and make an all-time high. Well, now after this latest sell-off in March of this year, it's the reverse. NASDAQ has not only gotten back everything it lost, it's made a new all-time high, right? ES, Dow, still lagging behind. So here's the question we have to pose to ourselves. Are the SPYs, the ES, the S&P, and Dow going to make new highs and catch up with the NASDAQ in the near future? Or is it going to back off, repair some poor structure underneath before all three indices maybe go in tandem to make new highs? It's a very important question. Don't have the answer to it. I think it would be healthy if we were to pull back first before we just keep trying to rip to new highs. But that's something we're going to have to watch and see what takes place. Don't forget, we have the Fed on Wednesday, right? So you might have a couple of quiet days prior to that before they speak. The correlation between oil and the market, I think you have to throw it out the window. We trade what's in front of us in the SPY and the ES, right? You know, you can't have it one way. Oil's down. That's why the market's up. Well, today oil, with OPEC and Saudi Arabia talking, oil's flying. And so is the SPY. So I think we have to throw that out the window. I'm going to keep detailed notes on the trades I take this week for the upcoming webinar this Saturday. I did a separate video over the weekend. It's only a 5-minute video. When you get a chance, go check it out. And hopefully you guys join up and gals join up and sign up. I think it'd be very informational and hopefully educate you people. All right. Let's go over destinations and a game plan for this morning. So right now on the upside, our first destination was going to be 10 wide at 320.06. So obviously if we open above that, it will become a downside destination. We are not going to just ignore it. So we have to see what transpires with that. Then above that, right now my pre-market high is 321.05. And then Friday's high of 321.28, which is a weekly high. And then above that, single prints in SPY, 321.29 get filled to 322.04 from February 25th. And then a daily high of 324.61. Remember, we've had price voids all over the place. Downside, upside. That's where these algos ripped up to on Friday and totally exhausted themselves. For the downside, if we open above the POC, that would be your first destination of 320.06. Then right now my pre-market low is 318.66. Then until we get more market-generated information, we don't have anything until Friday's low of 317.16. And then filling that tremendous gap down to 313, a 416-point gap. And then 311.25, 9 wide below that. So what's the game plan for this morning? Well, opening in balance, in value. You got to give the bulls some credit. After being exhausted and everything, again, sellers have a chance this morning after pushing this down a good part of Friday afternoon to at least try to test Friday's low and get into the gap. Well, as of right now, it looks like the opposite, where the bulls are attempting to get above that DI high. And I did not use eyes high of an afternoon rally high. I find it pretty hard to use an afternoon rally high when the indices are up 2.5%. But right now it's a very visual level, right? Is this excess? Well, we're not going to really know yet, right? If we get back, let's put it this way, if we get above eyes high, we're going to start eating away at that excess if it is. So that's a very, very important and visual spot. Can you take a put play here? You certainly can, right? It would have worked on Friday in J, K, L, and M. We never got above eyes high or D's high for that matter after eyes period. I would use eyes high as my out. If you take a put play and you get accepted above eyes high, the odds of going to the all-time high, going to Friday's high are pretty good, right? They're only 54 cents away. So if you get above it, you're going to start eating away at this excess. So then you have to depend what kind of heat you want. Do you want out as soon as we take out eyes high, or will you take the heat up to the weekly high? Are the bulls not strong enough to start one time framing up 4 weeks right away? That's something you have to determine. As far as a call play this morning, well, again, if you get accepted above here and start eating away, and then, especially in B period, can't take out A's low and start one time framing up, well, then there's a good chance I'd take a call play because the odds of taking out the weekly high are very good. On the flip side, if you open up, cannot take this out, travel back down to POC. Now, here's what's important. I always talk about M period being more important the following day than the day of. Well, this is an important one also. If you come back down, if we can't get above eyes high, and you come back down, if you taper off around the POC and don't get accepted into M period and start going back up, then you can take a call play again to see if we take out I. However, if you get accepted back into M period, we know what's gone on a lot of times. Once you get accepted into M, a lot of times you trade a good part of M's range, if not all of it. So you might trade down to settlement, you trade down to value low, and then we see if we get to the bottom of M. So that's one thing to keep an eye on if you take a call play here. Same thing, if you take a put play, if you get accepted below the POC, well, now you know where your destinations are. Destination would be settlement, value low, M low. If you come back out above M, you get out of the trade. But just remember, these trades are all being done in balance in value, the worst of your risk reward. If you're in CamelbackTrading.org's voice channel room, we'll be going play by play up to the moment when the market opens and as we are trading. And then let's go to the charts. Monthly, one time framing up 2 months. Next destination is the all-time high. We told you how powerful inside months are, right? You go with it and monitor it for continuation or lack of. Well, when we came out of that 294.88 monthly high, 2 or 3 days in a row, we came back into it. Not by a lot, but we came back into it. But when we finally got continuation, we're up $26. Pretty powerful, right? Just like on this one. Weekly, one time framing up 3 weeks, incredibly healthy. Do we get some kind of consolidation this week before either continuing up or maybe pushing down? Remains to be seen. I'll tell you what, if you take out Friday's high right away, that's a pretty good indication they're still pretty much in control, especially if they get distance away from it. If you just pop your head above it, back into it, well, then maybe they're still tired. Your next destination is that 325.85 weekly high and then that huge gap we had back at that time. And then on the daily, this is the one that kind of worries me a little bit. It's incredibly healthy as far as one time, we have the gap is my focus. The problem is all these gaps. 1, 2, 3, 4, 5, 6. There's gaps all over the place. It's supposedly called emotional trading with mindless machines. I can't call it that. I just call it mindless machine trading. So I think for the overall health of this market to pull back, consolidate a bit before going then for the all-time high would be healthier. Doesn't mean we can't go for the all-time high first. So right now, all time frames are up. Trade what's in front of you. No harm waiting for A period to form. Come check us out at CamelbackTrading.org. Have a great day, and we'll recap at 4 p.m.